Have you ever wondered how some Chinese families quietly build wealth that lasts, not just for one generation, but 3, 4, even 5? It's not about luck, and it's more than just hard work. It's strategy, deep, cultural, and time-tested, rooted in ancient wisdom, sharpened by modern business insight, and guided by a disciplined, long-term view of money. In this video, we'll break down 15 powerful principles that have helped millions across Asia build and protect generational wealth through real estate, entrepreneurship, saving, legacy planning, and strong family values. These aren't shortcuts or trendy hacks. They're time-proven philosophies with lasting impact. Whether you're just starting your financial journey or thinking about the legacy you want to leave behind, these rules will challenge the way you think about wealth and might just change it forever. Make sure to stick around for Rule 15. It may surprise you. Let's get into it. Rule 1. Invest with a 100-year mindset, not a 5-year plan. In traditional Chinese thinking, decisions are made with ancestors and descendants in mind. That means when you invest, you're not thinking about the next iPhone upgrade. You're thinking about your great-grandchildren. Real estate is a perfect example. Chinese families tend to invest heavily in property ownership, but not to flip homes or chase short-term market bubbles. Instead, they acquire land and buildings to hold for generations, treating them as a permanent family asset. It's not unusual for Chinese families to keep property deeds that are over 80 years old, passed from one generation to the next like treasure. This long-term view reduces panic selling, increases stability, and ensures that wealth compounds quietly in the background. It's not flashy, but it's powerful. Related wisdom: a man without land is like a tree without roots. So next time you think about a 3-year investment plan, ask yourself, will this still matter in 30, 50, or 100 years? Before going further, if you care about building wealth that doesn't die with you, hit that subscribe button, like this video, and turn on notifications. We break down timeless financial truths in a way schools never will. Rule 2. Build business, then buy assets. In Western finance, the rule often is get a job, then invest a portion into stocks and hope for returns. In Chinese tradition, the rule is almost inverted. Build a business first, then use the profit to acquire appreciating assets. Entrepreneurship is deeply woven into Chinese culture, even in tight regulatory or economic conditions. From street vendors to global billionaires like Jack Ma, the mindset is clear. Control your income source, then control your investments. This isn't about becoming a tech founder or starting a factory. It could mean running a family grocery store, opening a tailoring shop, owning a small logistics operation. Even a small business can generate predictable income, which can then be used to invest in real estate, education, or long-term stocks. Chinese wealth strategies emphasize cash flow over capital gain, control over volatility, value creation before value capture. Before throwing money into the stock market, ask yourself, have I created something that pays me first? Rule 3. Wealth is preserved through frugality, not flexing. In many parts of the world, people use money to signal success by buying luxury cars, oversized homes, and designer clothing. But traditional Chinese culture views that differently. Frugality isn't a sign of poverty, it's a strategy for power. There's a Chinese proverb that says, wear clothes with patches, but have gold in your pocket. This mindset is why many Chinese millionaires may drive modest cars, live in unassuming homes, and avoid flashy displays of wealth. Why? Because money saved is capital for future investments. While others are upgrading to a new iPhone, a frugal investor is buying dividend-paying stocks. While someone is paying off luxury car debt, another is building a second rental property. According to a report by Hurun, many of China's richest families are extremely low-key, emphasizing long-term capital preservation over lifestyle inflation. Lesson: frugality isn't weakness, it's financial discipline with a legacy in mind. Rule 4. Save like a banker, invest like a farmer. This rule is built around 2 core habits. Save religiously, like a banker protecting every cent. Invest patiently, like a farmer planting for a future harvest. Chinese families often instill a habit of saving from a young age. According to data from the World Bank, China consistently has one of the highest savings rates in the world, with over 45% of income in some years. But here's where it gets interesting. The savings aren't hoarded. They're strategically funneled into long-term investments: property, education, gold, businesses. A banker protects capital. A farmer cultivates it. So instead of spending windfalls or bonuses, families may use them to pay a child's college tuition in full, buy a piece of land for future development, fund the startup costs for a child's business idea. The formula looks like this: save to protect, invest to grow, wait to harvest. This builds multi-decade financial systems, not just isolated wins. Rule 5. Teach the next generation financial respect, not financial entitlement. Chinese families don't just build wealth. They pass down the mindset that protects it. There's a saying: the first generation builds wealth, the second maintains it, the third destroys it. To fight that cycle, many families actively teach financial respect. Children are often introduced to money early, through chores, family businesses, or simple lessons in saving and investing. Some techniques used include making children earn part of their allowance, involving kids in property visits or business decisions, teaching them how to track household expenses, giving small capital to invest in basic assets and learn from mistakes. In contrast to spoiling children with everything, Chinese parents often say, "I'm not working hard so you can be lazy. I'm working hard so you can go further." The goal isn't just inheritance, it's education and exposure. A family that understands wealth is more likely to protect it. Let's pause for a second. What rule so far hit you the hardest? Was it saving like a banker, investing like a farmer, or teaching kids to respect money? Drop it in the comments section right now. We read everything. And if you're finding this valuable, hit that like button so YouTube knows to push it to more future millionaires like you. Now let's keep going, because rule number 6 is where most people get it completely wrong. Rule 6. Property is power, but only when bought strategically. In Chinese culture, real estate is more than an asset. It's often viewed as a symbol of stability, legacy, and security. For centuries, land ownership was tied to power through emperors, landlords, or merchants. That belief persists today, and it shows. According to Statista, over 90% of Chinese households own their homes, one of the highest rates in the world. But here's the twist. While many rush to buy homes emotionally, Chinese investors do so calculatedly. They analyze location growth, not just aesthetics. They check rental yield potential, they negotiate aggressively, and they often hold for decades. Multi-generational wealth in China is often built through property portfolios passed from parents to children. So if you're eyeing real estate, don't just ask, "Can I afford it?" Ask, "Will it earn, grow, or protect capital over time?" Owning a home is emotional. Owning the right one is financial strategy. Rule 7. Turn family into a financial ecosystem. One of the most powerful but underused wealth-building models in the West is the family economic unit, something Chinese families leverage exceptionally well. Here's how it works. One sibling might invest in a family business. Another helps manage rental property. Parents offer startup capital. Children later care for aging parents, preserving estate value. This system isn't just cultural, it's structural. Instead of everyone chasing individual success, the family shares risk, reward, and resources. This creates easier access to business capital, lower costs of living through multi-generational homes, built-in caretakers, reducing end-of-life expenses. Compare that with individualistic cultures where everyone earns separately, spends separately, struggles separately. Chinese families pool strength, and the result is accelerated asset growth and generational support. If your family is financially fragmented, you're competing instead of collaborating. Rule 8. Ancestral thinking builds future wealth. A powerful and often overlooked pillar of Chinese wealth building is ancestral thinking, the practice of viewing financial decisions through the lens of future generations. In Confucian philosophy, honoring your ancestors isn't just spiritual, it's practical. You live in a way that your grandparents would respect and your grandchildren will benefit from. This perspective reframes how money is used, avoiding short-term speculation in favor of safe compounding assets. Investing in family reputation, building businesses that last beyond your own life. This concept aligns with a principle often quoted in Chinese culture. We drink water dug by the well of our ancestors. Modern translation: you're standing on sacrifices. Make your choices worthy of them. Imagine if every financial decision you made today had to be explained to your great-grandchildren. Would you still buy that car? Ignore that investment? Take on that debt? That's ancestral thinking. That's generational discipline. Rule 9. Emotional control is a financial superpower. In Chinese culture, emotional restraint is a virtue. In finance, it's a weapon. Markets rise, markets crash. People panic, or get greedy, or freeze. But the Chinese financial philosophy leans on a deep-rooted sense of balance, influenced by teachings from Taoism and Confucianism, which emphasize inner calm and non-reactivity. Here's what that looks like in action. Not selling during downturns, not chasing hype during bubbles, sticking to long-term plans despite short-term chaos. As Buffett himself once echoed in a sentiment aligned with this, the stock market is a device for transferring money from the impatient to the patient. In fact, emotional control often leads to better buy timing, risk management, decision clarity. Chinese investors often say, the less you shake, the more your tree bears fruit. Calm minds build calm money. Rule 10. Study the wealthy, but don't worship them. In the West, celebrity and wealth are often tied together. In China, wealthy individuals are often low-key, guarded, and even understated. This isn't shyness, it's strategy. Yes, they study billionaires, they read books, they learn from mentors, but they rarely idolize wealth. Why? Because they understand that a blind admiration leads to blind copying. Hype is not a blueprint. True strategy comes from adapting lessons, not mimicking lives. For example, a Chinese entrepreneur might study Jack Ma's rise not to become Jack Ma, but to apply the principle of resilience to their own industry. Learn from the rich. Don't become their fan club. This level-headed approach prevents overexposure to risky ventures, chasing someone else's dream, losing your identity in the process. Respect wealth, but reserve your strategy. Rule 11. Business is the preferred vehicle, not a job. In many Western economies, the traditional route is go to school, get a job, save for retirement. In contrast, the Chinese wealth mindset often treats employment as a phase, not a destination. While education is deeply valued, the goal isn't usually to retire from a job. It's to graduate into ownership, owning a shop, starting a franchise, building a logistics network, investing in scalable operations like real estate or e-commerce. This is why many Chinese immigrants, even with limited resources, quickly open family-run businesses. They understand one truth: no job will ever pay you what ownership can. A job is stability. A business is scale. Even those who remain in salaried roles often use their income as seed capital for side ventures, property investments, stock portfolios. Wealth begins when income no longer requires presence. If you want to build wealth like the Chinese, stop thinking like an employee. Start thinking like an owner. Rule 12. Adapt like water. Never get too rigid. Inspired by Taoist principles, one of the most profound teachings in Chinese philosophy is be like water. In financial terms, that means stay fluid, stay adaptable. Markets change, industries evolve, government policies shift. What worked in the past might not work tomorrow. Smart Chinese investors don't marry one method. They observe, adjust, and innovate. When brick and mortar slowed, they moved to e-commerce. When regulations changed, they pivoted industries. When currencies fluctuated, they diversified internationally. Rigidity kills momentum, but flexibility, that's wealth survival. Bruce Lee put it this way: empty your mind. Be formless, shapeless, like water. Water can flow or it can crash. Be water, my friend. Financial translation: be prepared to shift strategy without losing focus. Don't hold your ego tighter than your opportunity. Rule 13. Teach financial wisdom as early as possible. One striking difference between Chinese households and many others lies in early financial exposure. From a young age, children are taught to handle money, to respect work, to contribute to the household, to understand delayed gratification. Red envelopes, Hong Bao, given during festivals aren't just gifts. They're teaching tools. Parents often use them to show how to save, donate, invest, track. Why does this matter? Because financial habits harden early. If kids grow up seeing debt as normal, spending as recreation, money as taboo, then adulthood becomes a correctional journey. But when you teach wealth principles early, you create financial fluency, responsibility, and generational consistency. Want to build generational wealth? Start with generational literacy. Rule 14. Privacy protects prosperity. In Chinese financial culture, there's an old saying, "The fattest pig gets slaughtered first." Translation: flashy wealth attracts attention and not the good kind. While Western influencers might show off cars, jewelry, and lavish vacations, Chinese millionaires often dress simply, drive modest cars, and also keep their names out of the headlines. Why? Because privacy provides protection from envy, freedom from pressure, and it also helps focus on growth. According to a 2023 report by Hurun, many of China's richest entrepreneurs intentionally avoid media exposure, fearing reputation risk and unwanted scrutiny. Silence is not weakness, it's armor. The more anonymous your wealth, the more options you keep. Always remember this: our money doesn't need attention, it needs direction. Rule 15. Think in 100-year horizons. Finally, the most powerful principle of Chinese generational wealth: think in centuries, not seasons. Many Chinese families build wealth not for next year, but for next century. They ask, how will this decision affect our family name in 50 years? What structures are we putting in place for our great-grandchildren? How do we protect our values along with our assets? This thinking leads to long-term property holdings, trusts and inheritance planning, teaching values along with capital, avoiding wealth-destroying behaviors like overconsumption and overleverage. As the proverb goes, wealth does not pass 3 generations unless it is protected by wisdom. You're not just building money, you're building a legacy vehicle. If you think in 10 days, you trade. If you think in 10 years, you invest. But when you think in 100 years, you build a dynasty. Before we close, let's pause for a moment, because the truth is that most people won't do this. They'll nod along, they'll bookmark this video, maybe even share it, but they won't take the uncomfortable, consistent steps these principles demand. Why? Because thinking in decades is hard. Thinking in generations is even harder. It requires you to act today without the reward showing up tomorrow. It means making decisions your kids might benefit from more than you. That's not just strategy, that's sacrifice. But here's the catch. All generational wealth starts with someone willing to think beyond themselves. You're the pivot point in your family's story. Whether you come from wealth or struggle, you can be the reason your family speaks of legacy instead of lack. Don't get overwhelmed by all 15 rules. Pick one, live it, then teach it to someone else. Because money fades, trends change, but a mindset built on patience, value, and vision, that outlives you. If you've made it this far, one thing is clear. You're not just looking to get rich. You're looking to stay rich and pass it on. And that's exactly what these 15 Chinese investment rules can help you do. So here's your next step. Pick just one rule and apply it this week. Maybe it's setting up an automatic savings plan. Maybe it's investing in skills instead of shiny things. Maybe it's having that financial conversation with your family. But do it today, because generational wealth doesn't start with money. It starts with mindset. If this video gave you insight, share it with someone who's ready to build smarter, not just harder. And don't forget to bookmark this video. You'll want to come back to it. Are you looking to go deeper into practical wealth-building tools? Check out our previous videos to start building now. Because fortune favors the patient, and dynasties are built by those who think beyond themselves. Hit that like button, subscribe if you haven't already, and drop a comment below. Which rule hit you hardest? Let's grow together.